Here's a situation that happens more than you think. You need $3,000. Not to get rich, just to fix the car, cover the deposit, get through a rough month. You go to the bank, they check your credit, they ask for collateral, they want 3 months of pay stubs. You don't qualify, but your grandmother? She never needed the bank. She had something the bank didn't give her and couldn't take away. A system that Black families built themselves, carried across the Atlantic, and used for 300 years to move money without asking anyone's permission. It's called a Sou-Sou, and once you understand how it works, you're going to wonder why nobody taught you this.
The mechanics are simple, almost too simple. A group of people, 5, 10, 15, each agree to contribute the same fixed amount every week or every month. That amount goes into a shared pool. Then, on a rotating schedule, one person gets the entire pool. If 10 people each put in $200 a month, one person gets $2,000 every month. After 10 months, everyone has gotten their $2,000 lump sum, and the cycle ends. Nobody earns interest. Nobody recruits new members. Nobody profits from someone else's loss. You put in $200 10 times, you get $2,000 once. The math is exactly zero sum. What it does is take money you already have, money that in a savings account earns almost nothing, and turn it into a lump sum you can actually use. No application, no credit check, no collateral, no waiting 45 days for approval on money you already saved. The trust is the mechanism. The community is the bank. The name Sou-Sou comes from West Africa, among the Yoruba people, whose homeland spans modern-day Nigeria and Benin. This system was called Esusu, a rotating savings association built on trust between neighbors, family members, and community. When enslaved Africans were brought to the Caribbean, they brought Esusu with them. It adapted. It was called Sol in Haiti, Partner in Jamaica, San in the Dominican Republic, Njangi in Cameroon. The structure was always the same. The names changed with the land. By the time Caribbean immigrants were arriving in New York in the 1970s and 80s, researchers estimated that 3 out of 4 Caribbean immigrants in New York were participating in some form of Sou-Sou, not because they didn't know about banks, because they had learned something about banks that the history books didn't advertise. In 1865, the U.S. Congress created the Freedman Savings Bank, specifically designed to hold the money of newly freed Black Americans. Over 61,000 people deposited their savings, former slaves, Civil War veterans, families building something for the first time. In 1874, the bank collapsed. Corrupt white trustees had used the deposits for risky investments. The depositors lost $2.9 million, worth over $63 million in today's dollars. Only about half was ever repaid. Thousands of families waited decades for money that never came back. That was the U.S. government's first major financial institution built specifically for Black Americans. It lasted 9 years. Then it took the money. So when Black families in the 20th century didn't rush to put their savings in a bank, when they built their own systems, kept their own pools, ran their own rotations in kitchens and living rooms and church basements, that wasn't ignorance. That was memory. Now here's the part that most people get wrong, including a lot of people defending Sou-Sou online. Sou-Sou is not illegal in the United States. The traditional system, a fixed group, fixed contributions, rotating payout, no recruitment, no profit, is legal. It is an informal savings arrangement between consenting adults. What happened is this. In 2020, scammers started calling pyramid schemes Sou-Sou. They used the name to recruit people into systems where early participants got paid by later recruits, which is the definition of a pyramid scheme, and is illegal. The DC Department of Insurance, Securities and Banking put out a warning. It was a legitimate warning about scams using the name. But the headline read, "Beware of Sou-Sou," not beware of scams using the Sou-Sou name. Just beware. The centuries-old community savings system and the pyramid scheme got the same warning label. Meanwhile, in 2020, the Bankers Association of Trinidad and Tobago told citizens that banks would not accept Sou-Sou money as a legitimate source of funds, even though the practice had been central to Caribbean financial life for over 150 years. In South Africa, the same system is called a stokvel. It is completely legal. There are 820,000 registered stokvels, saving a collective $2.4 billion every year. The South African government tracks it. Banks compete for it. Same system, different country, completely different treatment. The Sou-Sou was not banned. It was confused, officially and repeatedly, with something illegal.
And that confusion had consequences. Here is how to run a real Sou-Sou the right way, with the protection you need. Step 1. Pick your people carefully. 5 is a good starting number. Everyone needs to know each other. This system runs on trust, not contracts alone. If you wouldn't lend this person $500, don't include them. Step 2. Set the number and the schedule. 5 people, $200 each monthly. That's a $1,000 payout every month for 5 months. Everyone gets one payout. The cycle ends when everyone has received. Step 3. Agree on the order before you start. Write it down. Who gets month 1, month 2, all the way through? The person who needs money most urgently can take an early slot, with the agreement of the group. Step 4. Put it in writing. 1 page. Names, amounts, dates, order of payout, and 1 line. This is a voluntary rotating savings arrangement. No member earns interest or profit. No new members may join mid-cycle. This protects every member and separates what you're doing from anything a regulator would question. Step 5. Use a shared transparent payment method. A shared Cash App or Venmo account where every transaction is visible to all members. Transparency is protection. Everyone sees every deposit and withdrawal. One rule that ends every Sou-Sou that fails. Never add new members mid-cycle. The moment you need new people to pay existing people, it stops being a savings club and starts being something else. Keep it closed. Keep it clean. In 1874, 61,000 Black Americans lost their savings when the government's bank collapsed. The families who survived that, and the generations after them, didn't wait for the next government solution. They built their own, in living rooms, in church basements, at kitchen tables. They called it different names in different places, but the structure was always the same: a fixed group, a fixed amount, a rotating payout, and the one resource banks can't manufacture: trust. That system is still here. 820,000 groups using it in South Africa right now. Hundreds of thousands of families in the Caribbean, and the US who never stopped. It doesn't require a credit score. It doesn't require collateral. It doesn't require you to prove yourself to an institution that has a documented history of failing the people it was supposed to serve. It requires 5 people who trust each other. Your grandmother probably already knew this. Now you do too. Has anyone in your family ever run a Sou-Sou? Or something like it, whatever you called it? Drop the name you used in the comments. I want to see how many different names this same system has across our community.